Ladies and gentlemen, good morning and welcome to the maiden presentation for the 12th Annual Research Conference. My name is Hilary Mulindi and I'll be presenting on behalf of my teammates, Mr. Hesbon Nyakundi, Kiplagat Josea, Christine Onyango, and Dr. Samuel Tiriongo. So basically, the discussion today centers around the analysis of drivers of customer satisfaction with a view of informing customer centricity strategies within the banking sector. To do so, our discussion will take 4 key areas. We'll look at the introduction, then the literature review will be able to give us an idea on how we conceptualize the aspect of customer satisfaction, which will guide our methodology and analysis, after which my teammate will come over to present the methodology, results, and policy recommendations. So the question is, why are banks shifting more to customer-centric strategies? That is the core of this paper. So basically, what is driving the banks to shift their focus towards understanding what will satisfy the customer. So basically we are looking at the industry growing, we have new players coming on board, we have digital service providers, and all these are tapping into markets that were previously occupied by banks. So the intense competition is actually making banks to consider customer centricity as part and parcel of their business strategy. And as this happens with more players, the regulators are not left behind. They get concerned on issues to do with customer issues, customer protection, and because of that we have the changes in regulatory environment which is also shaping this discourse. And at the center of all this discussion is the consumer, who has the power to determine which service they are going to utilize and how they are going to get it. So their expectations continuously get heightened. So based on these dynamics, we have the focus shifting towards customer centricity within the sector. So basically, if you look at the trend that has been happening, we'll categorize them into 4 stylized facts that have been happening within the banking sector along the issue of customer centricity. The first issue is around the accelerated digital transformation within the sector. Then we have the issue of physical branches, cybersecurity threats and data breaches, and as we have all seen, there's an issue of mobile payment being on the rise. So the first stylized fact whereby we're having accelerated digital transformation, we are able to see that because of this accelerated digital transformation, the banking sector has been adopting more online and mobile banking services. And as you can see from the chart alongside, the trend is showing that that aspect has been on the rise. On the second stylized fact, where we are looking at the issue of physical branches, yes, we have the digital aspect taking core focus of the banking sector, but that does not negate the role that the physical branches are playing in the sector. So if you look at the numbers, you can see that we still have high number of physical branches, which imply that although the digital focus is now taking the center stage in the banking sector, there are still some core services within the industry that cannot be done without the physical branches. So customers have to visit the branches so that they can get the services. The third issue is that as banks continue adopting digital platforms and digitizing their services, the issue of cybersecurity threats and data breaches are now rising. And because of this, we are seeing it posing so much challenge to the bank customers who are raising concerns, and even the banks themselves are becoming concerned on how they are going to navigate this challenge of cybersecurity. And lastly, we have the issue of mobile payments, whereby we are seeing its adoption actually modifying how banks are offering their services to their customers within the industry. So based on this stylized fact and how I've been able to spice it up, I would say this paper basically would like to analyze the drivers of bank customer satisfaction, and the core focus is to inform the customer-centric strategies. Of course, we understand that we have different banks. Each bank has their own strategy, they have their target clients, but this study basically offers a benchmark onto which the banks can anchor their discussions, and even as they move forward in terms of product development and product design, they have some idea on what to focus on. So to be able to conceptualize the idea behind this, we looked at 3 theories, theoretical framework and various empirical studies. Basically, we had the expectancy confirmation theory, whereby we look at the consumer expectations how the bank customers are able to form their expectation on various bank services. So this one is informed by their historical services that they've been able to use, the social status and other cues that they've been able to interact with. And based on that, they form their expectations. And as they use these various bank services, they're able to confirm whether it meets or it deviates from the expectation. And that's what will give us the level of their satisfaction. The second theory that really informs this study is the service quality model, whereby we look at the various product dimensions that will influence the customer satisfaction. For instance, assume you are the bank customer going to a bank. We have many banks, but how is the bank structured? How is the layout? How are the customers served? So those are the physical aspects we look at. Like when we talk of the tangibility, how are the customers welcomed? How is the waiting bill for the customer as they are being served? So those are the small things that we look at. The issue of reliability, responsiveness, how are they handled? How are their queries answered? How timely are they responded to? And then finally, we look at the Kano aspect, the Kano model, whereby beyond the basic aspect that a bank can offer, the basic service, like for example, accessing various services, what are other performance or excitement needs that the banks goes above and beyond the basic to meet the customer's needs? And if they're able to go above and beyond the basic, the customer will become more satisfied. So to summarize it all, we want to conceptualize what the theoretical framework and the empirical framework was able to give us, and this diagram simply summarizes it all. So we start from the bottom left, whereby this consumer has expectation, and this expectation is what will form their perceived performance based on a certain bank product or service. At the same time, this consumer has desires. So the perceived performance and desires would either determine the level of their congruency. At the same time, if the expectations are not met, the consumer will disconfirm or will have expectation disconfirmation. So basically we are saying this desired congruency and expectation disconfirmation is what will determine the overall bank customer satisfaction. But we know as an individual, there are other factors that come into play. The gender of the consumer, the age, income, and other aspects like if they have a disability will determine to what extent and to which this bank service or product will determine their level of satisfaction. So at this point, I would like to welcome my teammate to progress from that point.